everyone, and welcome to BNSN Weekend. Well, it's been the fag end of the earnings season, and it's been quite a roller coaster ride for the markets. But we've got lots lined up today on the show. Here are the stocks that we will be discussing. Well, first up, we'll be taking on board queries coming in on Escorts. We'll also be discussing the big boy that surprised on the upside, SBI. We also have our portfolio segment where we will be discussing today Sumesh S's portfolio. Well, lots lined up on the show. Let's bring on board then our two experts who will be guiding us over the next 30 minutes. Joining in on the fundamental side, Gaurang Shah, VP Geojit BNP Paribas Financial Services. And we have with us on the technicals as well. Joining in today is Gaurav Bissa, derivatives analyst at LKP Securities. Welcome to the show, gentlemen. First up to our query for the day, which has been sent in from Bachu Sen. It's an email query. Well, he's got a question on Escorts. He's got 1,722 shares of Escorts. He's bought it at a price point of 212. His question is, should he hold on, should he sell, or should he add more? He's got a time horizon of a short term. Now, just let's walk you through what's been going on with Escorts right off late. They sold their loss-making auto parts business. In fact, you also had the July sales, which came in at about 17% higher on year at 40,035 units. And some of the highlights by way of the quarterly earnings as well was that the revenue growth was robust at 1,047 crores. You had the profit growth as well, which expanded to 47 crore rupees. Operationally, also a thumbs up, 87.8 crore rupee EBITDA versus 57 crores, with the margins expanding smartly. Gaurang, I'm going to get in your views. Purely from a fundamental standpoint, do you think that this is a good stock that merits a hold in the portfolio?
Well, in fact, I'd go a length further and say that due to good monsoons, our sense is that the tractor business is definitely going to throw in a lot of positivity. You have a lot of movement at ground level in terms of earth moving equipments, wherein Escorts has a sizable amount of presence. And of course, given the outlook in terms of the monsoon forecast and of course a likely possibility of good harvest, well, I would request him to increase his time horizon. He's got a decent quantity of 1,722 shares at a level of 212. Our target is somewhere close to about 325. So if you want to have a little bit of higher profit, our request would be to hold on for it for a longer time.
Okay, that's the call coming in. Stay invested as of now. He's pretty upbeat on the stock for the long-term prospects also and giving some optimistic targets. Let's get in a view then, Gaurav, as to how you're mapping the stock on the charts. No doubt this week has been absolutely fabulous. It's priced in pretty much all of the gains. Do you think that the positives are already in the price or that there's more to go by way of movement on the charts?
There's a chance it may see some pressure that we have seen happening in the last couple of days, but I think there's some more room that is left. It's seen a multi-year breakout, and such large breakouts generally don't fizzle out that soon. So yes, I agree that on a larger time frame, there's a chance that it may even move much beyond its current market prices. But yes, for very short term, probably a month or so, if that is what the outlook is, I think 325 is on cards. One can have a stop loss of 285, trail the stop loss of 285 and hold the positions. It can test levels of 325 within a few weeks.
Well, that's a view coming in. Clearly, it's a consensus hold on in the portfolio when it comes to Escorts. Take a look at the kind of returns that the stock has delivered. This one's a keeper. Let's move right on, and Mr. Bachu has sent in his second query, which comes in on SBI. Well, he's got close to 1,386 shares. He's bought it at a level of 204 rupees a piece. With a short-term horizon, yet again, he wants to know what exactly he should do. Well, what a stellar performer it's been by way of results. Asset quality surprised positively. Net interest income and profits came in line with expectations in the first quarter, with the fresh slippages down very sharply to about 8,790 crore rupees. You had the recast assets as well, which came in at about 36,551 crore rupees, though the global net interest margins were down almost 13 basis points. But indeed, this is a telltale sign, you think, Gaurang, of the kind of earnings trajectory that SBI is likely to put forth for the coming quarters as well. What is your outlook as to what our investor here should do?
So, Avan, I think this is the time to stay invested for long term in stocks like State Bank of India, which has shown a magnificent turnaround in terms of earnings, especially on Friday when we had the numbers of State Bank of India coming out. Street by and large was expecting a disappointment in terms of numbers, but what a number it was, and our sense is that this stock can get re-rated as we go forward from here on in terms of quarter-on-quarter earnings. We have a positive coverage. As of now, we are working with a target of 265. He's got good quantity and a level of somewhere close to about 200, 205. So please don't be in hurry. You have more to make on your capital, but for that you need to give it a little bit more time. So stay invested.
Okay, this one's a keeper. Price target 265, but of course, patience is going to be key when it comes to SBI. Gaurav, let's talk a little bit about how you're viewing SBI on the charts. At levels of 243, do you think that it has the legs to move up further? Given that he has a fairly short-term horizon as well, what's the view?
Certainly it has legs to move further, but also one has to take in the view that the immediate resistances are seen at 250 to 55 zone, and I think it will not be a cakewalk for SBI to break these levels. If these levels are breached, then I think 270 to 75 also cannot be ruled out. That can be seen in a couple of months. So I would say at these levels, with the kind of breakout that I have seen on weekly charts, it's closed above the much comfortably above the 200 DMA. Everything always well. Volume-wise breakout has been seen. Book some profits here as and when it opens on Tuesday at levels of 243, 245. That is the expectation. Book some profits over here. Trail the stop loss to 235, because we have seen on a weekly chart, if you see 250 to 55 zone, once if that is breached, there is a breakout. If it fails to do so, there's a chance may even slip towards 220, 225 levels. So I would rather be a little bit cautious. The only reason being that we have strong resistance coming for Bank Nifty as well around 19,000 levels. So one will have to take that part into consideration as well. So I would recommend book half profits and rest trail the stop loss to around about 235.
That's the view coming in. So book part profits and hold on to the rest. Really, that's the view on SBI. Do remember, Gaurav has pointed out some of the other levels as well to map up on the charts. And you had Gaurang who said that this is definitely a stock to hold on to. Well, on that note, hope we've been able to answer your stock queries. We take a quick break. Sumesh's portfolio, that's what we'll discuss when we return. Welcome back. This is Buy Now Sell Now Weekend, and as promised, we've got our Portfolio Advisor segment lined up. Well, today's Sumesh's portfolio is what we're discussing. He's 29 years old and he's a government official. He's got a one-year time horizon. There's a total of 9 stocks in the portfolio. Let's get straight to it. Well, first up, he holds Hindustan Zinc in the portfolio. He's got close to 1,300 shares at 185. Arrow Textiles, 1,200 shares bought at 48 rupees. Moving on, Tata Steel features on the list. He's bought close to 20 shares at 326. IDFC too is a stock that he holds. 570 shares, 48.5 is the purchase price. There's V-Guard Industries, 1,230 is the buy price, and he's got close to 30 shares. Havells too features on the list. 320 shares at 331 bucks. Moving right on then, there's some heavyweights like Coal India as well. He's got it at a level of 346. Spark features on the list too. 430 is the buy price. And finally, from the large cap cement space, 50 shares of Ambuja Cement at 230 rupees. Gaurang, let's get in your views on the first 3 stocks. Hindustan Zinc is what he holds in the portfolio. What's the outlook ahead? Wonder if you track Arrow Textile or not. And what's the outlook when it comes to the ever volatile Tata Steel?
Well, yes, ever volatile it is post the Brexit. There is a lot of question mark in terms of their UK operations. But nevertheless, coming to Hindustan Zinc, positive view on it and seen meaningful turnaround in the entire metal pack. Minus, of course, Tata Steel because of the overhang of their UK business. So on Hindustan Zinc, hold on for a target of 235, revisit it at those levels. On Arrow Textile, no specific coverage, but yes, no point getting invested into such lesser known names. My advice would be to make a shift to Development Credit Bank, that is DCB, for a target of somewhere close to about 225 on DCB, long term point of view. On Tata Steel, we have a reduced recommendation, that's a disclosure, and it would be prudent to park your money in Vedanta at lower levels for a target of 220.
That's the view coming in. Some chops and changes really need to be made when it comes to the first three stocks, though Hindustan Zinc, that's a keeper. Moving right on then, do you think that IDFC is a good stock to have in the portfolio? What have you made of V-Guard Industries, and as a whole, Havells, do the results inspire confidence?
Well, there is a lot of news flow on IDFC merger, reverse merger, merging with IDFC Bank, etc., etc. My sense is that you are better off buying something like an Ashok Leyland, which has corrected sub 90 levels. And on Friday, we had some positivity in terms of the Supreme Court banning the registration ban that was put into place post the National Green Tribunal issue that had wrecked up, environmental issues and pollution issues. Our sense is that not only on fallback of this, but even the Ministry of Road Transport has put in a place of scrapping 10-year-old diesel commercial vehicles. There is optimism in terms of GST rollout because of logistic doing good and thereby demand from fleet owners going up, and also positivity in terms of defense supply because they do supply armored vehicles and trucks to the Ministry of Defense. So on the backdrop of all these positivities and also that they were successful enough to reduce the debt to a great extent, my view is that you are better off buying into an Ashok Leyland. We have a target of 120, very conservative target. On V-Guard, we have a positive coverage for a target of 1750. Hold on to it, revisit it at those levels. And on Havells India, a great name, electrical peripherals and of course electrical equipments. A new range of products were launched some time back, evergreen customer loyalty for the products, and of course a larger market share to be conquered. So hold on to Havells for a target of 435.
Okay, that's the view coming in on the next few stocks, and clearly it looks like V-Guard and Havells are good stocks to have in the portfolio. Coal India of late, what's the view given the kind of movement that we've seen? 346 is where he's bought it at. He's also got Spark in the portfolio, unfortunately losing out on this investment. And cement has definitely been a hot sector of late. Ambuja Cements, do you like that among the lot?
So amongst the last three names, Coal India, we are positive long-term for a sector which is, or a company which is associated with mining or oil exploration upstream, gas exploration upstream companies, cap goods, engineering. As a matter of fact, you need to have 1 year, 2 year plus kind of time horizon. 1 year is not enough, 1.5, 2 year, 2.5 year kind of time horizon, given the gestation period and longer commercial operations that it may take because of the nature of business that they are into. So Coal India, hold on to it. Our initial conservative target is 420. I'm sure we are going to revise this upward given the positive outlook on the output as well as linkages issues getting resolved, wagons being purchased by Indian Railways, and of course dedicated freight corridors coming in. Our sense is that all these will throw in a lot of positivity for a company like Coal India, and one of the largest reserve company in terms of coal reserves. So hold on to it for a target of 420 as of now. On Spark, my sense is that go in for Sun Pharma, which is the larger company, of course, belonging to the same group. Friday, we saw the numbers coming, mixed set of reactions. Stock went up to 820, 830, then slipped back to 800 and recovered the lost ground. Our sense is that positivity is going to emerge. Resolution of Halol plant in Gujarat for Sun Pharma is going to be utmost priority and importance, and that's where they are going to see sizable amount of contribution coming through once the approval comes through for the export market. 950 is a conservative target on Sun Pharma. So if you want and if you can, make a switch from Spark to Sun Pharma. On Ambuja Cement, yes, you are right. tremendous traction in terms of uptake for the entire cement pack, and whether it is large cap, mid cap or small cap, anything that ends with the cement name behind it has done extremely well. And our belief is that being a frontline company in the sector, Ambuja Cement is going to do extremely well. Hold on for a target of somewhere close to about 285 or so. Review the targets, review the investments as and when they attain the targets that I have mentioned.
Yes, and then write into us after that. Well, that's the view coming in from Gaurang. I hope you've taken note of all the chops and changes and recommendations that he's made in your portfolio, as well as target prices that he has, in fact, elaborated on. Well, very important disclaimer then from our end. Do remember that this is only a model portfolio. You should consult your individual investment advisor before taking any investment decisions. Let's slip into another break right here on the show. Do come right back for top recommendations. Welcome back. Thanks for staying on with us on Buy Now, Sell Now weekend. Well, let's pull up the chart of the Nifty for this entire week. And, well, we've got pretty much the earnings season out of the way. We've also got the global events out of the way and the credit policy. And after all the give and take, 86.72 is where we shut shop. For the Sensex, we managed to gain just about 0.2% to end at 28,150 levels. The broader markets, well, it was a pretty quiet show for the mid-cap index. The small-cap end of the market, though, managed to come under a fair bit of pressure. So, Gaurav, let's talk about the outlook on the markets right now. Do you reckon that this is just a little bit of a phase of consolidation and that the action is only going to kick in come the short to medium term? What kind of levels would you watch out for?
There will be consolidation, yes. If we see the daily charts, we have seen that there has been breakout above 8670 levels, but it has not been sustained either on a weekly basis or 2 or 3 days continuous close above these levels, and that has resulted in some pressure. So overall, the levels of 8550 to 8500, from where we have seen a good amount of bounces coming in the Nifty, they will be taking a strong support. On the other hand, 8750, 8800, these are the levels that I feel for next 1 week at least we will be having a good amount of pressure from these levels. So overall range will be 8500 to 8800. That will be for 7 to 8 trading sessions. Above 8800, I think Nifty can even try to retest the previous highs, and will be a very swift and very strong move above 8800, and that will be the level from where I think one can garner a buy in Nifty futures a little bit aggressively, or aggressive buying options that can be seen at these levels. I don't see a positional buy, rather a trading buy.
Okay, that's a view coming in on the technical charts. Gaurang, let's get in your call on how you've seen the earnings season so far shape up. Where have you seen the hits and the misses?
Well, it has been a mixed bag all the way. Even on Friday, you actually go to see a stellar set of numbers from State Bank of India. Equally was the disappointment for something like, Cipla, as a matter of fact, or even as a matter of fact, Sun Pharma. There was some amount of, concern from the street from a purely short to medium term point of view. And our sense is that we are only going to evolve for better. And for us, it is more of a bottom-up approach. And in the earnings season, it's going to be more of stock specific, like we were just mentioning about cement. And that's going to do fantastically well. Auto ancillary selective. We also optimistic about FMCG names, oil marketing companies, private sector banks. These are the selective, sectorial themes that we are following and we are advising. Mix of both large cap as well as mid cap. And my sense is that as we go forward and as more policies are put in place, as reforms take up shape, we are going to look in a much more better spot and a sweeter spot as well. So all dips like we've seen in the past, maybe closer to 8550 or 8500 or maybe a little bit lower than that, will be a great opportunity to accumulate stocks from a long-term point of view.
Okay, that's the view coming in on the earnings season and the week that's gone by. Let's talk about some top recommendations then. And Gaurav, take us through what looks good on the charts.
The first recommendation would be buy on Voltas. We have seen not only a daily chart seeing a good breakout, but a weekly chart as well. Volume participation has been exceedingly well. Good amount of longs are seen getting built. Option activity has been rampant. So everything augurs well for the stock. The immediate targets of 390, 385 can be seen. One can have a stop of 359 and go long in the stock. Second would be buy on Indable Housing Finance. We have seen consistent higher lows coming in, which implies that trend is still up. A major resistance is seen at 800, 805 zone. Might be preempting at this point in time, but with the kind of momentum that we are seeing, momentum indicators are very strong. RSI is in uptrend. I think 805 can be crossed, which can catapult it towards 840, 850 levels. One can have a stop loss of 780 and go long. And the final recommendation would be buy on Coal India. Consistent long positions seen getting built. There was a small breakout on daily chart seen at 335 levels. It's given a weekly close above these levels, which is a positive sign. One can have a stop loss of 330, play for targets of 355.
Okay, there you have it. Those are some top recommendations to watch out for from a technical standpoint. Gaurang, let's get going with some wealth creation, long-term investment ideas. What appeals to you?
So it's a fusion of three sectors put together. One is from an FMCG, other one is from pharma, and the third one is from a public sector bank, mid-size one if you will. The first one is from the FMCG Bajaj Corp. Great presence, great product profile across different verticals, and of course a great consumer loyalty as well. We are targeting 455 on Bajaj Corp from a long-term point of view. The second one comes in from the pharma pack, that is Aurobindo Pharma, a stellar performer right from 2013 up until now. Consolidation because of the overall overhang on the pharma pack, but this one has been doing some good numbers quarter on quarter, half yearly, yearly, and has got some decent product pipeline as well. We are working with a target of 925 on Aurobindo Pharma. And the third one comes from the PSU banking mid-size, if you will, syndicate bank. And the way we were speaking about State Bank of India numbers on Friday, we expect turnaround to be very soon for some of selective PSU banks in terms of gross and net NPA issues as well as provisioning. And we expect the banks to report good set of numbers and recovery thereafter. Working with a target of 130 on syndicate bank from a long-term point of view.
Okay, there you have it. Thanks so much, gentlemen, for taking time out and joining in with your views and helping our viewers out. On that note, it's a wrap right here on the show. Thanks so much for watching.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.